Today I want to cover my trading strategy. I started trading almost 8 years ago. I've tried many different indicators. I would spend countless hours trying them out, trying to apply them, learn them, and I started listening to a lot of podcasts of people that are successful in trading and trying to learn what they're focusing on in the markets. One thing I started seeing was a pattern that a lot of successful traders are not using traditional like indicators that are like MACD, RSI, etc. They were mostly focusing on things that matter and what drives the market. For example, order flow, volume profile, supply and demand, the DOM, and all of that. And that's where I also started looking at and started seeing a lot more success. And I've been trading this way for about like 3.5, 4 years and been seeing a lot more success and proof of actually becoming profitable. To me, this makes the most sense because this is what actually moves the market. And it's not, for example, if you're using some moving average on some 2 or 3 minute time frame that nobody's looking at, and you think that it's going to bounce off that moving average. I'm sure over time you'll see that that strategy could work sometimes, but it's very hard to actually outline and get proven results over time. Again, this is not a financial advice. This is just sharing my experience. Past performance is not indicative of future results. So take this as an educational video of me sharing my last 8 years of experience and where it's led me to focus on. So I'm trying to shave off a lot of time for you if you're starting recently or you've been trading for a few years, that this is something that could help you focus on the right things. Just a quick image. I just want to show you that a lot of people show strategies and claim that they're profitable. Here's an example of a screenshot I took. This is actually Apex Trader Funding that I started using recently, and I'm getting funded from them already. I have multiple accounts through them that are funded, and I'm getting payout requests through them. So this strategy works. You just have to be more disciplined and stay to the plan. Later, I could also show my Interactive Broker account that I use for personal trading before I started trading on Apex Trader Funding and show my trading success there as well. One thing also to bring up, Apex Trader Funding is doing an 80% off discount right now until the end of July. So take advantage of that. It's 80% off all of their accounts. So you could use the coupon code in the description. Ever since I started trading on Apex Trader Funding, I think it's a very great company to work with. They pay out on time, and I had no issues working with them at all. The ability to use the trade copier and Sierra chart to leverage multiple accounts has made it much easier for me to not even use my personal account much anymore for day trading or swing trading. I just focus on Apex Trader accounts because it's pretty easy to get funded, and the same rules that they have is the same rules that I normally have for trading, so it doesn't bother me on some of their rules. So check it out. I would highly recommend them. So let's jump into my trading strategy. First things first, I usually like to look at the daily bars of the S&P 500 and look at the order flow, which is the difference between buyers and sellers. So for example, this is July 14th candle. We had a market that rallied up, but as it was rallying, it started seeing some accumulation on sellers stepping in here. You could see some of my shorts that I created. I called a peak right here where it tested the highs here with 28,000 more sellers than buyers. And this, I was projecting this to drop lower, and it did. And I also called this bottom because we saw this almost recovery here. It fell down with 11,000 more buyers and sellers. Next day, dropped a little bit lower, retraced higher with 12,000 more contracts. And I was expecting this day to be positive and green, and it was, but with 8,000 more contracts on the sell side. But the thing is, for example, it's not always 100% accurate because, for example, there was an inflation report that happened on this day, on Tuesday. And even though there's 8,000 more sellers and buyers on this entire day, it still showed that it was not enough for me to actually take this number and start shorting here. And same with this number as it was breaking out those highs. I usually like to look at this as a helper to project what the next day will hold. So usually what I like to do is, I start the day looking at the daily S&P 500 order flow, as well as the previous day and what the market's been doing overall. and then project what the next day is. So for example, on July 13th, we saw 15,000 more buyers than sellers, and I was projecting this day to be more green, and it did push higher here, but then ended up lower as sellers stepped in. And this is something, as this day was forming, I was already seeing a lot of sellers, so I was very cautious. So that's a very high level overview of what I look at a long-term time frame. So looking more at the intraday, I personally like to use what's called volume bars. Volume bars are, each bar has a certain amount of contracts in them. In this case, I use a 20,000 volume bar, and it shows me the delta between buyers and sellers on a 20,000 volume bar. Why I started using 20K volume bars is because for me, I like to see what's actually happening on this 20,000 bar candle, what the delta is. If you just have a minute time frame, you could have a bar that's standing for a while and it's just going to show you a random number. It's still possible that you could use it, but I just preferred and saw way more success with 20K volume bars when the market is somewhat volatile, and then I switched to a 10,000 volume bar if the market is much slower. And this is specifically for ES futures. For NASDAQ, I use 5,000 volume bars because there's much less volume that's being traded. So that's just a quick summary of the bar setup. The other indicators that I use is this delta above the bars. This is the difference between buyers and sellers for each particular bar that you use. I also use initial balance, which is the first hour or 30 minutes of the session open. So we have the low and high, and it paints the initial balance of the initial balance. And I also, Sierra chart has this awesome thing called initial balance extensions, and this is an example of July 14th. We had the market almost test this to the tick and recover, and I actually took this trade here and made a decent profit. Before I go into depth on like what I was looking at, I'll continue. I also use volume profile for the hour candle bars. So this volume profile right here is every hour. So from 7 till 8 o'clock, it shows the volume profile from 8 to 9, 9 to 10, and so on. This number above here shows me how many contracts are left to close out the 20K bar. So it keeps me posted when let's say I see 2,000 more sellers and buyers, but this is still halfway. For me, it could close even in the positive, if anything. The teal lines that I have here is the closing range of the previous day, which is the last 45 minutes of the day. So if you look at the last day, we had the high being around here and then the low here before it closed. And you could also see that this area also acts as certain support and resistance. I've seen a lot of success using it. You could see some of the ways I set up these indicators in my other videos, so check those out if you have any questions on how to set them up. I'm going to be more talking about how I use the setups that I have, and I'm trying to explain how this chart looks and what I'm looking at. It does look pretty ugly initially if you take a look at it from without explaining on how any of these indicators work. But once you get a feel how everything is connected, it's very simple to understand and so on. So let's start with the basics of my strategy. Like I already mentioned, I start looking at the daily order flow, and then I zoom in on the 20,000 volume bars. And for example, in this case, I was saying that this bar closed at 15,000 more contracts on the long side. So this day I'm looking for potential longs. And that's exactly what happened here. I was looking at potential longs, and I want to see what, as this market is either selling off or finding some support, I want to see some areas to go potentially long on with very low risk. And that's what happened here. We had the market sell off with a lot of sellers on each 20K bar. As you could see, we had 2,000, 1,000, 1,600, 3,000 more sellers and buyers. Then it started slowing down a little bit, but then it made this push with 2,100 more sellers and buyers right into the initial balance extension line and bounced up from here. This could create an opportunity to go long, which I did. I took a long here and then got out somewhere around 51, 52 here because I started seeing some sellers here. And because this drop happened, there's a lot of sellers that started building up on the daily bar. So this was showing like about 8,000 contracts at that time. So I was fine taking profit here. The other thing also is as this volume profile for each hour is shaping up, I like to trade into these cluster of orders here. So for example, we had this market open up at 6:30 here, and then for this hour, the volume profile started building at this area here. It attempted to push up with negative delta. So to me, this was not a convincing break of this volume profile. So when it broke out, I'm only looking for potential shorts. This day in particular was very interesting because I was convinced to go long based on the order flow of the previous day. But I also started seeing a lot more selling pressure coming in here. So I ended up taking a long off of this initial balance, which ideally I'd like to side with the order flow on the hour, and I'll explain that in a bit. But here I just saw a great opportunity based on the previous day's order flow, went long here and locked in a small profit here. It's slightly conflicting the order flow on the daily, but I'm still interested in taking an intraday trade against that order flow on the daily. So here's an example. We had the market at 6 o'clock, volume profile building up here. It made a push higher. There was some selling pressure on this break here, so it wasn't convincing me that this is actually going to keep going higher. So once it broke this cluster of orders here, ideally looking for only short positions, but this was a rare case where I took it based on the order flow that I saw on the daily here, which locked in the profit. But the perfect scenario would have been for it, once it dropped here, retested into this cluster of orders here, and then you start seeing a lot of sellers stepping in here. You could start shorting around this price and so on. And if it goes a little bit higher, you could scale a little bit more and take a short here. And that would be a perfect scenario for a short. And then you start looking at the order flow, what's happening on the 20K volume bars. So in this case, we see 2,100 more sellers than buyers. And then it just keeps dropping, and every bar is closing with more sellers and buyers. And one thing, like for example, seeing 446 on the entire 20K bar is not a convincing number that this is actually just going to start recovering. So I would hold through this and keep shorting. If you're a multiple lot trader, let's say you took 2-3 contracts here short, I would suggest taking some profit on this extension line here, even though there's a lot more sellers still, and then just let a runner go. And as this market started showing a lot of selling aggression here, it looked like a lot of sellers got stuck and started pushing out. So this bar, once it starts crossing higher, what's happening is all of these sellers here with 2,060 more sellers than buyers, they're stuck in a losing trade now. So what this market did was it recovered, pushed high, pushed a little bit lower into this bar here where 2,000 more contracts were on the short side, which started off with 1,000 more contracts on the buy side, which most likely is these sellers were locking in a break even and some going long. And you could see a similar pattern here. Let's say if you locked in some profits around here, a potential reshort opportunity would be coming into these areas with a lot of more sellers and buyers stepping in here. And it's testing this high of this volume profile, which it broke by like a tick or two here and then started selling off again. So one thing you would ask, where do you place your stops? Ideally, you'd want to, so going back to this initial trade here, let's say if you took a short here, what I like to look for if I'm trying to get out of the market is if I see a lot of sellers stepping in here and then you take a short, and if I see an aggressive push higher here, let's say going, for example, the 6 o'clock hour here, we had some buyers, a little bit of sellers stepping in, and then you kind of have this like rejection to the long side. Ideally, I would want to get out from that trade and take a small loss. So for example, if this one was 2,100 more sellers than buyers, and this bar started pushing higher with aggressive buyers, I would just lock in that loss here and just wait for a better opportunity, potentially into these highs here, depending on what order flow would have done. But sometimes it is tricky where you see it will grow on something like this. We'd have almost the same amount of sellers and buyers, but it's continues growing. In that case, you just keep holding and your stop would have been a break of this new high here, unless you started seeing a lot more aggressive buyers stepping in. So that, and same with here. If you took a short here, you would also just kind of watch what the order flow is doing, and initially maybe set a stop above this high here, and then just watch what order flow is doing. If it started seeing aggressive buyers, you don't have to wait all the way for it to reach here to take a loss. You could just lock in a loss and then just wait for a better opportunity. In this case, if it kept going higher, I'd start switching my position and looking to go long in this scenario once it retests some of these prices here. And again, for longs, I would be looking for more buyers than sellers on the order flow. Some other rules to mention: I don't trade the first 30 minutes of the day. I like to start trading around 7 o'clock a.m. And then usually I like to end by 9 p.m. And this is all Pacific time, because this is where the market moves the most. And I don't like to trade the rest of the day, but sometimes I still do. NASDAQ is very similar as well. Same concepts apply to NASDAQ. One thing I do like to mention is I like to trade when both markets are aligning on, for example, either a short or a long. And what do I mean by that? So for example, we have NASDAQ that's selling off with each hour volume profile is dropping, right? And this area that I previously mentioned here at 10:40 here time frame to 11:10, we started seeing it come up to this area with sellers stepping in here with 1,100, 1,300, and I'm looking for a potential short here in this area, and then a stop probably around here initially, and then you're just watching what the order flow is doing. And what I like to do is I like to take a look at NASDAQ. What is NASDAQ doing in this scenario? We also started seeing some selling pressure here. We had a little bit of buying coming in here, but then another seller stepping in here at, like, let's say 11:09. Going back to ES here, this is around like 11:09, probably around this bar. You had sellers stepping in here. So this makes it more probable that ES is also going to sell off if NASDAQ is also weaker. What I don't like to see is ES is showing some selling pressure, but NASDAQ is doing something like this right here, just showing a lot of strength off of this volume profile here. So you don't want to. So usually when NASDAQ is going up, you're not really going to see a sell-off on ES necessarily. So something to keep in mind. It's a little bit hard to explain what I mean by that, but I definitely keep tabs on both markets, NASDAQ and ES, if I'm trading either or. Some of the other things that I look at in a different tab here, this is a 1-minute chart. I also look at the cumulative delta bar volume here, which shows a little bit of the order flow action for the daily here. So for example, this is the drop at around 7 o'clock here that I was mentioning right here. So I took a gamble here, went long with a very small stop below. After it started going up here, I took a long with a stop right at the new low. So if it went down, I would just be out. But that's the other thing that I didn't like when I was selling here, was as it was going up here, broke the VWAP. After it broke the VWAP here, the cumulative delta was flat here. It wasn't increasing. This is actually in the negatives right now. It starts from 0 when it opens, and it was about 8,000 more contracts on the sell side here. So as it's going up, growing here, it's showing weakness here. So I was fine just locking in profits around here, and it did make a little bit higher push, but it was fine for me to lock in. And same with if you were ideally not even going long here, you'd just look for a short opportunity. You would kind of confirm with the cumulative delta bars that this is not increasing, so it shows weakness to take a short here into this volume of cluster of orders here. And an example, let me check the 11 o'clock time frame. Same thing here. Market was somewhat recovering here into the VWAP here, and also delta just kept dropping. So you could also take a small low risk short here and see what the market does. I don't want to overload you with too much information, but this is a very high level, specifically trading this last previous day. I'm not taking a special day in the market that this actually worked on. This is just the last previous trading day that's happened, how I read the markets. I'll definitely create more videos like this in the future covering different days. And if you saw this video, you're going to have a lot of context of what I'm talking about when I'm talking about those other days. So I'll be definitely referencing this video and creating more videos like this. So if you found this video helpful, I would encourage you to subscribe. I create videos to help educate other traders. I do a lot of recap and projection videos on the S&P 500, on the daily order flow. I only recently started this YouTube channel to help other traders to share some of my experience from the last 8 years of trading. So I appreciate you watching this video and hope you have a good rest of your day.